Have you ever been talking to someone about investing and they have said either the prices are too high, there's a crash just around the corner, I'm waiting for the big reset? Of course you have. This is something that you do not even need to answer. This is something that I get all the time when talking to other people about investing. So what I'm going to be doing in this video is actually giving you some reasons why you should not be waiting for a stock market crash and how actually waiting could potentially end up losing you money. Stay tuned. So when it comes to investing into the stock market, everybody that has purchased at least one share has had the thought of whether the stock market is too high or not. And whilst this is a completely natural thing to think, some people let it completely take over their entire investment strategy, and it actually ends up costing them so much more money in the long run. So like I just mentioned, I want to give you 5 reasons as to why I think you should never wait for a stock market crash to invest your money. But of course, as always, this is just going to be my own personal opinion and it shouldn't be taken as any kind of financial advice. I've personally been in the investment game for almost 4 years now, and even back when I was starting that time ago, people were still then telling me to wait it out and wait for a stock market crash. And if I was to listen to them now, I probably wouldn't even be here talking to you about investments because I'd still probably be on the fence. So if that's something you're cool with, let's get into it. All right, so reason number 1, and let's just get one thing clear. This isn't even so much of a reason. Not one person in the entire world can predict when the stock market is going to crash. Not me, not your dad's friend Roger, who claims to have masses of experience in the stock market. No offense to Roger, by the way. Not even one of the greatest investors, Warren Buffett, could predict the crash. And I even have proof, and that is just one word: coronavirus. Basically, when I'm talking about corona and the stock market, you may or not know, but when the big news about COVID hit in March of 2020, we saw an absolute massive correction across all of the stock market pretty much overnight. And like I said, there is not one person in the world that could have predicted that. So that's just number 1. It's not really so much of a reason. It's more of just a warning to you guys when you are talking to other people about the stock market. And that is, nobody knows when the stock market is crashing. And if they claim they do, they are lying. Reason number 2, and that is, whilst no one can predict a stock market crash, that also means that no one can ever pick the perfect day to start investing. So what is the point in waiting? Basically, the longer you wait trying to time the perfect days to invest, the more chance you actually have missing out on the best trading days of the year, and not being invested during these days can actually cost you so much money over a long period of time. What I'm actually going to do is pull up some data here provided by JP Morgan to emphasize this point a little bit more. And basically what you are seeing here is the performance of $10,000 invested into the S&P 500, which is the top 500 companies in America, on January the 3rd, 2000 all the way to January 2020. And basically what you are seeing here is that if you were to invest $10,000 on January the 1st, 2000 and left it in the stock market the whole time, didn't touch it, just simply left it there, you should have $32,421 at the end, which is roughly about a 6% increase every single year. Now, if you miss just 10 of the best trading days over that same time period, you would have only made about $6,000 from that investment, which is more than half of what you would have made if you just kept it there, just for missing 10 days. So basically what I'm saying, if you're telling me over a 20-year period, you can consistently perfectly time the market, then absolutely fair play to you. It's of course not impossible, but for me, it's literally like my worst nightmare. And then just going back to the data once more, if you miss the best 20 days, you literally barely make any money at all. And then if you miss any more than the best 20 days after that, you actually end up losing money. But yeah, I hope that makes sense. Obviously, this isn't to say anything like day trading or swing trading isn't profitable. This is data based simply on the best trading days over that time period where the market went up the most in a single day. Okay, so I hope the first 2 things cleared up a few things around people saying that they know when the stock market is going to crash and stuff like that. And basically leading on to point number 3, and that is, if you have the attitudes of points number 1 and number 2, you will actually end up never buying anything. You will simply just get so scared to invest and so unsure, you will never end up even getting involved. You will become one of those people that will talk about all the things that I said at the start of the video. You're waiting for the crashes, blah, blah, blah. And I can almost guarantee you, most people who say that to you has never invested in a single thing in their life. And to be honest, if that is the attitude that people have, then it's probably best they don't actually invest, because they are already way too emotionally attached to the stock market before even making their first move. I feel like I'm starting to rant a bit there, but anyways, bringing it down just a tad, and another reason why you should never wait for a stock market crash, and that is if you are investing for the long term, especially into things like index funds and ETFs, the price now shouldn't even matter at all. The only time the price should matter, like I said just before, if you were doing something like day trading or swing trading, but once again, this is trading, not investing. Investing is investing for the long term, but if you plan to invest regular amounts over the next 10 years, you are going to be buying at different prices every time, some higher, some lower, but over time it will average out, and then in the future, that's when you can be more focused on the price of your stocks. Basically, what I was kind of explaining there is something that is also known as dollar cost averaging, but what I'm going to do is get into that in just a second when I actually talk about my own personal strategy. So the next thing I want to share is a little bit more of a mindset, or maybe something that you should ask yourself more than a reason not to invest in the stock market, and that is simply, when investing into a stock, the only time you lose or make money is when you sell. And it's basically as simple as this. I remember when I bought my first Facebook stock, I bought it at around $180, and it was about a month before the massive Cambridge Analytica scandal. And when that came out, the stock of course plummeted. Now, if I would have panicked and sold that stock straight away, I would of course made a huge loss. But what I did was simply hold that stock. In fact, I actually bought more of it because it was cheaper at the time and I knew it was going to go up over time. And now the stock has actually gone up close to $300 at the point of recording this video, and this is now making me a massive profit. So if I was to sell this stock now, I would be massively in the green. And I think this is a really good mindset to take into any investment in the stock market. And one quote from Warren Buffett that has always stuck with me goes a little something like, only invest in a stock if you would be okay with it going to zero the next day. I'll throw the exact quote up, I might be almost spot on there, but basically what he means is, don't panic and trust the process and the companies you're investing in. So there's some of my reasons and opinions as to why you should never wait for a stock market crash, and why I think waiting will actually cost you money in the long run. And maybe you're thinking, well, what do you even suggest doing? Basically, all I have is an extremely simple strategy. I've talked about this multiple times on my YouTube channel before, but basically what I do is I invest into two different ETFs from Vanguard. One is VUSA, which covers the S&P 500, and the other one is VMID that covers the FTSE 250. And basically all I do is put a set amount of money every single month into these ETFs. And why I find this is so good is because what I'm doing is dollar cost averaging. Basically, like I mentioned just before, if you're doing this and dollar cost averaging over the months, what you're going to be doing is sometimes you're going to get the stock for cheaper, and then sometimes you're going to be paying more. Either way, I'm going to be invested at all times, and I'm never going to miss those main trading days where the stock market absolutely shoots up. And then, like I said, over time, it's actually going to average out quite nicely. And that is basically my core strategy, a very much a boring strategy, but one that I know will make me money over a long period of time. And then all I do from there is I look for opportunities into individual companies and invest as and when I can find a company that I really like, and more importantly, one that has really good long-term prospects. And that's simply it. I don't worry about crashes or corrections. In fact, if anything, and this is going to sound a little bit weird, but if you have the same mindset as me, you will definitely get this, but I actually get excited when the stock market drops, because this simply means that I can get the stocks that I believe in for the long term on sale. I am buying stocks when they go up, I am buying stocks when they go down, and over a long period, this strategy has always paid well for people. But anyways, this is just my opinion. This is not financial advice in any way, shape or form. It's simply what has just worked for me in the short 4 years that I have been investing. I know it's not a very long time, but it's also something I strongly believe in for the future. Now, if you got some value from this video, I would massively appreciate it if you liked the video to help out with the YouTube algorithm, and of course subscribe if you haven't already. Apart from that, I will catch you guys in the next video. Take care.